But let's see how global investors are reading this verdict and whether a lot of global money, dollars, will flow into India in the hope that major policy reform will happen. Punita Kumar Sinha of the Blackstone Group, who's been watching India and investing in India for many decades now, 2 decades now, joins in. Punita, thanks for joining in. What was the big reaction in honor of yesterday? Is it because global investors believe that political uncertainty is out of the way, or India needed to play a little bit of catch-up with other emerging markets in any case?
I think it's both. First of all, the uncertainty, amongst the foreign investors and investors here in the US, there was a lot of concern that there were a lot of fragmentation happening to Indian politics, and they always compared India to China and felt that India wasn't able to keep up its growth because it's not going to be able to implement due to lots of opposition at the center, unlike China, which was able to push through reforms more cleanly. So that worry is getting lifted. So people are beginning to are going to see India, at least from an FDI point of view or even FII point of view, as a more stable place now to invest, where they do think that the government might be able to. The valuation premium, clearly, if you look back at 1991 to 94, India used to trade at 20 plus times multiple. Today it's trading at 14 times. And it's in line with the other regional market, but there was a time when it used to trade at a premium to other markets. So possibly for a very short period of time, it could go to a premium with this euphoria.
Punita, morning. From an FII's perspective, though, what kind of expectations do you have both for where this market might perform and what might come in by way of policy changes?
I think on the very short term, possibly yes, but on the long term, it depends on whether the government is indeed actually able to deliver on the expectations that are now in place, because a lot of reforms that have been on hold in the last several years are necessary to get done. And so if the government doesn't do them soon and execute on those, then there could be quite a bit of disappointment. So I think it's very important that the budget that happens in June, July is a good one and it reassures the market. I also think that one of the big concerns with India is the fiscal deficit, and that, the government needs to address that quickly.
Any specific points, though, that global investors like you would be looking out for, or any specific expectations you would have from the government in the next 30, 45 days?
Well, I think, as I said, the government obviously has won because the rural population of India has been quite happy with what they've done. But to keep them happy, they are going to have to keep spending more in terms of pro-rural programs, and that require funding. So they have to, they don't have too many choices. They have to privatize. They have to divest some state assets. They have to allow FDI in certain sectors. Otherwise, how are they going to get the money to finance all this growth and the demands? And so I think they don't have too many choices, and they have to implement some of these measures fairly soon.
Aside from the upward momentum, though, Punita, the question everyone's asking is whether or not our market has made a durable bottom and seen the worst earlier this year.
For the short term, I would say yes. But for this to be sustainable long term, two things have to happen. One, the global economy has to continue to show signs of improvement. If we have another leg down in the global economy, then obviously India cannot just continue to move on its own pace, because that liquidity would get impacted, and risk appetite for all markets might come down again. The second one is the sustainable of the reforms, and the right now it's conceptually looking great, but things have to be delivered, and execution is very important. And so I think those two things have to happen. Finally, if the markets continue, if you go back to 1991 and you look what happened for a period of 4 months, the market was up almost every day for 4 months, very strongly. It almost doubled in 4 months, and then it crashed. So I think while we might see some of the same stuff short term, the key again is, are people going to be willing to chase in this euphoria, or are they going to want to wait for some corrections to build positions, or are they going to wait for some more global signs? I think at the moment it looks like everyone wants to chase, but I don't know how long.
Well, What's going to happen on the global side, you think, Punita? Because so far we've had a great global rally. India's caught up after the event of the last week. But do you see global markets holding their good constructive shape even going forward?
I do think there's some signs of global troughing that is happening. First of all, China has clearly spent a huge amount of money, trillions of dollars, both on the investment side as well as on their stimulus. So there has been a pickup in demand in China, and that's been very important to help, some kind of demand coming in for commodities. And so we've seen some commodities rally as a result. In the U.S., we've seen home prices in a couple of key areas bottom out, some kind of pricing improvement and some kind of sales improvement. Unemployment is still very high, but the space of unemployment in terms of job losses is coming down a bit. The leading indicators, the global PMI, for instance, is above 50 now, so that's showing signs of pickup. In China, it was the first country to show signs of pickup, and it went over 50. Now we're seeing that happen in other countries as well. So clearly, I mean, it looks like the worst may be over for now, but longer term, again, a year or two out, we don't know whether there could be another leg down in the economy. Some economists are expecting an L-shaped economic recovery after a V-shaped recovery, an L-shaped. So there definitely are some signs of recovery, but whether the U.S. financial system and the global financial systems are going to be completely out of the woods, I don't know.
You've been investing for many years in India as a market, Punita. On the basis of valuations, though, are you feeling comfortable about the levels we're at?
I mean, we don't give out targets. All I can say is that before the election, the market was trading at about 13, 14 times with just an expected earnings growth over 12 months of somewhere between 5 to 10%. But just after the election results, on the hope that the government will be able to push through a lot of reforms, earnings are getting upgraded by analysts across the board. So that means that if the government is indeed able to deliver on infrastructure, banking reform, insurance reform, which are the ones most widely expected, that earnings can get upgraded, and we could see an earnings growth higher than 10%, 15%. Morgan Stanley just raised their GDP forecasts for India from 5% to 6% So clearly, there is a lot of upgradation happening, and if indeed we are able to follow that path that is expected, then yes, earnings growth, valuation, there definitely is likely a re-rating.
Good speaking with you, Punita. I appreciate you taking the time out for us. That's the Blackstone view in the market, which by